Welcome to today's episode. In this session, we're breaking down fresh analyst insights on four major companies featured in the latest Zacks Research Daily report: JPMorgan Chase, Netflix, AbbVie, and Ohio Valley Banc Corp. These insights highlight long-term growth opportunities, near-term risks, and the macro forces shaping these businesses. Let's get right into the analysis. Segment 1. JPMorgan Chase. JPMorgan Chase continues to perform strongly in 2025, with shares rising more than 27% year-to-date. Despite this solid performance, the broader investment banking industry has actually outpaced it slightly. Even so, JPMorgan remains one of the most resilient and diversified financial institutions in the world. The research report points out that a combination of business expansion, loan demand, and interest rate environment will continue to support the bank's net interest income. Analysts project that JPMorgan's net interest income will grow at a compound annual rate of 3.3% through 2027. Investment banking continues to be a bright spot. The company has a strong deal pipeline and maintains a leadership position in capital markets. However, higher mortgage rates and ongoing market volatility could hold back fee income. On the cost side, JPMorgan is still facing elevated expenses driven by technology, operational investments, and marketing. Expense growth is expected to run at a 4.4% annual pace through 2027. One notable area to watch is asset quality. With a tougher macroeconomic backdrop, provisions are expected to rise by 10.5% in 2025, signaling caution. Overall, JPMorgan remains a long-term compounder, but investors should anticipate slower near-term earnings growth as costs and credit provisions increase. Segment 2. Netflix. Next, let's talk about Netflix, one of the standout performers of 2025. Its shares are up nearly 19% year-to-date, significantly outperforming the broader broadcasting and television industry, which is down sharply this year. Analysts highlight that Netflix's success continues to come from strong subscriber growth and exceptional viewer engagement. On average, members are watching around 2 hours per day, an important indicator of customer retention and brand strength. One of the biggest developments this year is Netflix's advertising-supported tier. More than 55% of new signups in markets where the ad tier is available now come from this lower-cost plan. This gives Netflix a new, high-margin revenue stream and widens its customer base. The company also has bold long-term ambitions. Netflix aims to double its revenue by 2030 and ultimately reach a $1 trillion market capitalization. To get there, it's expanding aggressively into international programming, live events, and gaming. These additional categories are meant to diversify revenue and reduce dependence on traditional scripted shows. Netflix also raised its full-year free cash flow guidance to $9 billion, reflecting improved profitability. For the upcoming quarter, the company expects revenue of nearly $12 billion, representing 16.7% growth, and an operating margin of 23.9%. Major content drops, including the final season of Stranger Things and NFL Christmas games, are expected to further boost subscribers and engagement. Netflix continues to redefine global entertainment, and its combination of scale, brand power, and global content strategy puts it in a strong competitive position for the next decade. Moving on to AbbVie, one of the top performers in the pharmaceutical sector this year. AbbVie stock is up more than 34% year-to-date, nearly doubling the performance of the broader large-cap pharma industry. A key highlight is AbbVie's smooth transition following the U.S. loss of exclusivity for its flagship drug, Humira. Many expected a significant revenue decline, but AbbVie countered it by launching two highly successful immunology drugs, Skyrizi and Rinvoq. Both have received new approvals across multiple indications, driving strong demand and offsetting the Humira slowdown. Analysts expect AbbVie to return to strong revenue growth in 2025, which is notable because it marks just the second year after Humira lost exclusivity. This demonstrates the strength of the company's product line. AbbVie has also been active on the acquisition front, targeting early-stage biotech companies to build out future revenue opportunities. These acquisitions position the company for long-term growth as competition intensifies across the immunology and oncology markets. However, investors should be aware of several headwinds. Humira erosion continues. Competitive pressure is rising for Imbruvica, one of AbbVie's major oncology products, and macroeconomic uncertainty remains a challenge for the aesthetics business, including Botox. Still, the company's strong momentum in immunology and smart acquisition strategy give AbbVie a compelling long-term growth story. Finally, let's discuss Ohio Valley Bank, a microcap bank that rarely makes national headlines but has delivered outstanding returns. Shares are up more than 62% year-to-date compared to a 1% decline in the broader Midwest banking index. This small regional bank has a market cap of just $166 million, yet it has shown impressive strategic focus. The bank has been expanding its net interest margin by reallocating its loan book towards higher-yielding commercial and real estate loans. At the same time, it relies on stable, low-cost deposits to support earnings. Loan quality remains solid, and efficiency improvements from recent cost management initiatives are boosting profitability. The company is also returning capital to shareholders in a disciplined manner. However, analysts note a few risks. Rising provisioning needs and increased collateral-dependent balances could impact earnings in a weaker economic cycle. There's also a dependency on subsidized public deposits, which adds macro sensitivity. Additionally, loan growth and share buybacks are trailing peers, which may limit near-term investor enthusiasm. Even so, the stock trades at a discount relative to its improving fundamentals, making it a potential value opportunity, but with higher than average risk given its small size. Final thoughts for investors. Across all four companies, a clear pattern emerges. JPMorgan is stable and diversified, but facing cost and credit pressures. Netflix continues its global growth story fueled by subscriber strength and new content formats. AbbVie is executing one of the best patent cliff transitions in pharma history, and Ohio Valley Bank offers high upside but carries meaningful macro and regional risks. As always, investors should balance long-term potential with market volatility, interest rate trends, and sector-specific challenges. This concludes today's investing breakdown. Stay informed, stay disciplined, and always invest with a long-term mindset.